Moving on, we have Prashant Tatke, who's written in through email. Now, he says that he inherited property that underwent redevelopment. He was paid compensation in cash, which was deposited in a capital gains account to subsequently buy another property. Now, he wants to know if he should declare this amount as personal income tax if it is deposited in capital gains account with a nationalized bank.
I'm going to answer this question with one small presumption that you received only a cash compensation and it was not a case of you receiving a flat plus compensation, since you've used only compensation there in your question. So if you received cash in lieu of a house, it would amount to a sale or a transfer for which you've received consideration. This consideration you have deposited in a capital gains account scheme and then used it to acquire another property. So squarely you can take the benefit of section 54. You've reinvested in a residential house. That's the end of the story. There is no tax. Yes, this computation would have to be shown in your tax returns, but there would not be any tax liability.
There would not be any tax liability. Very quickly, Vinay, when you go in for redevelopment, there is a lot of other income that you get. You get rental income, like he just pointed out. There is a hardship allowance, etc., that is given. Are all of these taxable?
Well, with rental income, it's very clear that if you have spent the amount for taking a property on rent, then to the extent you have spent, it will not be taxable. But if there is a leftover amount, that leftover amount would be taxable. Things like hardship allowance and all really does not fall within the category of a revenue or a taxable expense. But this position is likely to be disputed by the department. So if you declare it and say, all right, I'm not going to pay tax on this hardship allowance, at least you must be mentally prepared to fight it out with the department.
Okay, so the hardship allowance, etc., you're saying that you actually have to pay tax on it?
No, you don't have to pay, but whether the department will accept this position, this is my opinion that you don't have to pay it. But the department may not accept this position and each officer has his own view. So there's no clear law on this. So you will find that perhaps some officer may allow it, but a lot of them are not going to allow it and they are going to want to tax you on it.
Yeah, that's very strange, and that actually, because of all of this that you're saying, I also want to ask you a couple of questions from the society point of view. Now, for a housing society that goes into redevelopment, even there is certain money that is involved. Now, the housing society does stand to get a corpus from the developer, when they go into redevelopment as kind of compensation, and also which goes in towards the sinking fund. Now, this corpus, say they get it at the beginning of redevelopment, then what happens? Do they need to pay tax on it?
It does not matter at what point of time you get it. Now, when you are giving up a flat, in exchange what you are getting is another flat, and whatever may be the value of that flat, you have reinvested it in a property, in a residential property. So benefit of section 54 is available to you. The corpus itself, now again there is no clear law on this. So let us look at what the Income Tax Act does. You cannot tax something which is self-generated, like for example TDR. It's not possible unless it is mentioned specifically in the Income Tax Act. So my view would be, if you're selling TDR and this kind of a thing is not mentioned in the Income Tax Act, therefore it's not taxable. So the consideration you receive for that also should not be taxable. However, the department rarely accepts this kind of a thing, and you will find that at least at the lower level, the assessing officer and the commissioner of income tax would go against you, and if at all you need any relief, it's at least you'll have to go up to the tribunal level.
So essentially what you need to be very clear is, if your building is going in for redevelopment, whether as a society or as an individual, you need to ensure that you have a lawyer on your side, and you also need to ensure that you have a tax expert on your side, because these are problems that you can anticipate getting into, coming up against, and you will need to find solutions to that. So if you're going to a tax tribunal, you better have a tax expert on your side.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.